Hello Sector Watchers, welcome to the 28th episode of Sector Spotlight, which will air on Tuesday the 28th of April. That means that it is now Monday the 27th of April, and the 27th of April is King's Day in the Netherlands. Usually that is a big party, especially in Amsterdam. Everybody is out on the streets and the canals are full of boats and everybody is dressed up in orange. Anyway, we have a very full show today. It'll be only US sectors and we have to start right away, so no agenda, no mailbag, no pair trades, just sectors. Stay tuned and I'll see you in 30 minutes. Let's start with a quick overview of what has happened last week. And instead of using the perf charts, I thought what better than an RRG to actually show the same. So here is the RRG over the last 5 trading days since we last spoke, showing the asset classes. And if I sort it on the percentage change, I can immediately see what was good and what was not so good. So we can see that the US dollar had a pretty good week, so did US treasuries, and very weak performances this week for real estate, again for commodities, and also the corporate bond index not being too well. The stock market down 1.2%. That's the core total US stock market, so it's not the S&P 500. If we move to the right hand side of the screen, there's the same chart but now showing the sectors. Actually, the market is already open in the US right now because I'm a little late today. So if we bring this back one notch, so this is Friday to Friday, then we see that energy was the best performing sector last week, finally coming to life a little bit. We'll take a deeper look into that later on. Communication services, pretty good, and then all the others were negative. S&P was down 1.3% for the week, and real estate and utilities basically, well, I was going to say topping the charts, but in this case it's at the bottom of the chart. So far for what has happened. Now, last week we went in depth into the charts of the various asset classes, and I promised you that I would do the same this week, but now for sectors. And the way I want to do that is to actually bring up the sector RRG here on a weekly basis, and I'm going to keep this one here on the right, which is on a daily basis, and I'm going to bring that up to today, so you see that the rotations have continued in the way they were going. And then usually I'd like to do this on a 3 set, but the screen is too small to do that, to make it visible for you. But if you have a nice big screen at home, I always like to have one browser with the weekly RRG, one browser with the daily RRG, and then if you have space, a separate browser with the actual chart of the item that you're looking at, and then you can look from a weekly RRG to a daily to the actual chart and work your way through the universe and make your notes and make up your mind basically. Let's start. I want to start in the lagging quadrant. Where you don't want to be, where you don't need to be, that's also very important. A lot of people forget that. I always like to focus also what you do, where you should not be. That gives you a lot of opportunity for outperformance. And good for us, that message at the moment is actually pretty clear. So I'm gonna sort it now on the tails, upside down, and we'll start in the lagging quadrant. And now I can highlight the first sector here, that's industrials. And I'm gonna do the same, and that will not align, so I'm gonna align this one on symbols so I can find it easily. So now I can see the industrial sector It's inside the lagging quadrant, traveling further into the lagging quadrant, so lowering on both axes. And it's actually doing pretty much the same on the daily RRG. There's a little hook here, but that's only one day, that's only today. So the general direction is still pretty negative for industrials. If you compare it to last week, industrials did a little bit better than the S&P 500. So if we do here, no, it did actually worse. So this is to Friday, minus 1.3 for the S&P, minus 2.4 for industrials, and this is why it's hooking up, because industrials is now actually doing a touch better than the S&P 500. Now if we bring up the chart for industrials, I need to go into my list, and that's actually right here. And what you see is a sector that bounced off these support levels quite rapidly, but then it stalled. And what is absolutely worrisome is the picture that the relative strength shows us, because it's actually a pretty bad relative picture for the industrial sector. So in my overview, and I'm going to present to you the org chart with all the sectors and the colors, we're going to keep industrials at an underperform, sell, avoid rating. If we go to financials inside the lagging quadrant, let's bring it up on the daily, you see the same, and it's actually rotating from improving into lagging. So it's basically confirming what we see on the weekly chart. And if we then bring up the chart for the financial sector on a regular chart, we see a picture that's very similar across a lot of sectors. Big dip, found support somewhere in the region of 2015, 2016 highs, bouncing, but not really able to get to the gap area, let alone close the gap area. Again, here for financials, a seriously weak relative outlook against the S&P 500. So inside the overall sector overview, financials definitely remains an underperforming or a sector that's better avoided. Third one inside the lagging quadrant is the energy sector. And that has been a very weak sector for a long time already. If we stick with the weekly here, then you see that this sector is at the left-hand side of that plot pretty much for all history. So I've loaded up 1 year of history for this universe, and you see that the energy sector was on the left-hand side all the time. On the daily version, we see that the energy sector, oops, wrong screen, has rotated. Let me bring this here so we can see it. Actually came into leading mid-April, did very well, and now it's starting to roll over again. So very weak on the daily, but a little bit of a hiccup. That hiccup was caused by the improvement that we saw in the last 2 to 3 weeks. And if we bring that on a regular chart, and we have that right here, then you see the very clear breaks of support in this chart, especially the one here. We hovered above it and then we gapped lower, and you can see that now this bottom area of that gap is now starting to show up as a resistance area. Relative strength is still very, very weak. If you bring this onto a daily chart, you actually see that it looks as if there is a little bit of pressure building up here. The relative strength sort of okay. It's a very, very early and very bold call. I actually wrote an article on this, whether energy is preparing for a turnaround. So be careful, the devil is in the details, is preparing for a turnaround. It's definitely not there yet. And what you would like to see for that to happen, or at least to give a little bit more color to this move, is that on the daily chart, XLE will be able to push into that gap area, which means price is above 36.60, 36.70. And then it can actually go to the top of the gap, which is above 40, which is on this price level still around 10% gain. Such a move should be able to keep the daily tail on the right hand side and drag up the tail on the weekly RRG. Again, it's not happening yet, so in my analysis, in my overview, I will still keep the energy sector at an underperform rating and sell and avoid, because there is some stuff building up, but I just don't have enough conviction yet to change that sector into maybe neutral or outperform. With a tail like that on the weekly, that's very difficult. If you just measure US sectors on their RS ratio, energy is still the weakest sector. On the other hand, it will not always remain the weakest sector. So the trick is to actually find and pinpoint the moment where it starts to build up some strength and pick up against the rest of the universe. I don't think we're there yet, but we may be seeing some early warning signs here. Now, if we go to the weakening quadrant, we find our darling technology index. Bring that up here, and you see that on the daily chart, it's also inside the weakening quadrant, but it shows a very nice curl back up after obviously having been very, very strong for a long time. And what I see here is that technology has a very short tail, and short tails tell me on an RRG that there is not a lot of power behind the move. So the way you can read this rotation on the weekly RRG is, yes, technology lost a bit of its power, lost a bit of its momentum, but look at the length of the tail in comparison to the other tails that we have on the chart. It's not very long. It's one of the shortest in the universe. So it's going through sort of a corrective phase. That's what we see on this daily RRG as well. So we had that rotation for technology coming out of leading. Go even further back. Out of leading into weakening, and now we start to curl back up. And with the weekly tail where it is right now, just on the verge of weakening and very short, the odds are pretty good that this is going to be curling back up and turning back into the leading quadrant. If we bring up the chart of the technology sector, then we still see a very strong chart, especially from a relative perspective. This is still a very nice, gradually rising uptrend. We see a little bit of a hiccup here that's been causing this dip and that little rotation downward on the daily chart. Probably even better visible if we make this a daily bar chart, and you can see that we're sort of pushing just below 90. So just from a price perspective, if XLK is able to take out resistance around $90 US, that'll definitely open up further upside. And I think that will be, you see this little consolidation here in relative strength and both RRG lines close to the 100 level. If we can take out that resistance, that'll probably take care of a break out of this consolidation on relative strength. That'll push the tail on the RRG further back into the leading quadrant, and if all goes well, that will drag around the tail on the weekly RRG as well. So technology, despite the fact that it wasn't the best sector for the last week, in a long-term perspective, I think that technology is still one of the sectors that should be overweighted in the sector, or you should definitely be aware of its position inside the US sector universe. Let's quickly move to real estate. Real estate on the weekly and here on the daily. And we see that this rotation here is not very promising. It was on its way, but then started to to move down quite rapidly and head down almost vertically, and that is now being confirmed by the move on the daily RRG. We didn't make it into the lead. Well, we made it into leading, but not for a very long period of time. And then if we bring real estate up on the chart here, then you will see that it has bounced off this former support level, now resistance. And what I really don't like, what is worrisome, is that the relative strength, this looked pretty nice, but it wasn't able to push above this horizontal barrier in relative strength, and it's now threatening the lower barrier. So it's already trading below it, albeit a little notch, but you see that the RRG lines are already responding to it. They're curling over, and that's what we see in the RRG here. If this relative strength number moves lower than it already is, these will drop below 100 and we will be pushing real estate into the lagging quadrant. So I'm actually gonna move on my overview. I had real estate on a blue, on a neutral. I'm actually gonna make that an underperform because I just quite don't see this improving anymore. I see a loss of relative strength and I see a tail rolling over and heading towards the lagging quadrant. So I don't think real estate will be one of the very good sectors in the next few weeks. Now, consumer discretionary, we talked about it a lot. The Amazon effect, remember? That makes it a difficult sector to read. It's inside improving, a very short tail. Remember what I told you about technology with a very short tail? We see the same here. And we see a nice move through leading. That is predominantly caused by the Amazon effect. I've loaded up the equal weights just because it's so important for this sector. And the discretionary in equal weight is in the equal weight RRG is pretty clear inside the lagging quadrant and moving further to the left, while the cap weighted is inside improving and moving to the right. It's confusing. I am still trying to figure out how to read it. On the cap weighted, maybe it's an outperform, maybe it is. If we bring up the price chart for this sector, you see that it is improving here. We see this move in relative strength. Can you feel my doubt and my confusion? I'm just not 100% sure. So I'm gonna keep this at a neutral because simply I don't want to just chase one stock, and the equal weight sector gives such a very clear signal. So I'm gonna keep this one at a neutral. Let's move on to materials. This one started to move from lagging into improving, which is very nice. If we bring that up on the daily, it's less nice. It looks as if that improvement that we saw on the weekly here is already starting to roll over. And see, this is a 5 trading day move. This is where we spoke last week. It looked pretty nice then. We actually started a pair trade idea, and it's now already rolling over. I do like the improvement that we see here on the weekly RRG. So let's have a look on what the chart tells us. There I see an improvement, and it's again this week again looks to be improving. If we do the daily here, you will see that it's coming out of this little consolidation pattern. This is actually one of the sectors that was able, it was not a real gap, well it was here, but it was not a real gap, not one of these very open areas on the chart. So I think that the area around 51.75, 52 is going to be pretty crucial. What I see developing so far today is pretty good. So I'm actually gonna keep materials at a neutral reading. Remember, we upgraded that last week from an underperform, but I'm gonna watch this like a hawk, because when it breaks this level here and we're gonna, you know, make this pull around, that weekly RRG is actually not too bad, and the relative strength here is starting to improve. We got, you know, 2 higher lows, so there's 3 touch points here, which is encouraging. So this materials sector I'm still going to keep an eye on from a positive perspective, although for the time being I still rate it as neutral. Communication services. Talking about short tails. Let me bring it up right here. Here it's a little bit better, but again, you know, compare it to the rest of the tails, not very long, very close to the benchmark. And it's definitely a neutral sector. I'm going to keep it at a neutral. If we look at the chart, a horizontal ratio line, a horizontal line here means that the sector is moving in line with the S&P 500. Well, this is not exactly horizontal, but it's in a very narrow range. And you see that the RRG lines are just, you know, struggling above and below 100. So this is just like the S&P 500. Not much to gain, not much to lose either. So, you know, communication services, keep an eye on it, but it's going to give you a return that's pretty much bang in line with the S&P 500. We go to utilities. Talking about disappointing sectors, we've been watching these so-called defensive sectors doing pretty well, and we're all happy about it, and then utilities just didn't do it. If you look at it here on the weekly RRG, the last 5 weeks we're already lowering on the RS momentum scale, so we're moving lower. We hooked lower here March 30, and then since then we started losing momentum. And if we look at the daily RRG, then you see that it's sort of, this is here, started to lose strength March 25. So that's like 3 weeks already, and we just didn't make it. And now you again see this hook. See, that happened twice here. So see the bomb, down. Now improving again, boom, down. So this one just doesn't seem to do it. And if we bring up the chart, it's not as narrow as communication services, but it is a narrow range. And with the market being what it was for the last couple of weeks, I would have expected utilities to be much stronger, to be much more of a safe haven, much more of a defensive sector. It's still on the right-hand side. I'm not 100% sure if we should do it. The one reason I'm gonna keep it at an outperformance, at a green box, is because what I see on the daily, and what I see here is that something that could develop into a bullish flag pattern. We've gapped down, we recovered, we had this 58 level as resistance. We managed to break above that, that's a good thing. We now start to get this little flag-like pattern, and relative strength's not really bad. I mean, don't get me wrong, I mean, it's not an underperformer, it's just in my mind, in my perspective, it's not exactly doing what I thought it would be doing. So I'm going to keep it at an outperformer right now, just because you want to have some sort of a spread in your portfolio, and this one is not going to harm you when things go really, really wrong. This is definitely one of the sectors that you can always rely on to provide shelter, but it's not going to give you a super outperformance either in the next couple of weeks. So this is more like my protection sector. Let's go to staples, consumer staples, bring that. So on the weekly RRG, staples are doing really, really good. We're inside the leading quadrant. We're leveling off a little bit, but still doing pretty well. And if we go to the daily version of the chart, you see that you see that we actually, you know, go through some sort of a setback, but we're already picking up. And that shows even better if we go to the price chart. Strong recovery. We broke out of that range. It looks as if we're breaking back. So that really I'm going to watch, because that I don't like. I don't really want it to drop back into that range. So we're gonna keep an eye on the daily for that. So we're gonna keep this at an outperform, because it's one of the better sectors. It's well inside the leading quadrant, well positioned there. And if we look at the daily, then you see some loss of relative strength. That's what we saw on the daily RRG. We're improving a little bit again. It's picking up on the momentum scale, but we seem to have put in a higher low. Again, this is benefit of the doubt, basically because of the longer term RRG picture, which is showing a very nice position inside the leading quadrant, and because on the daily we have a higher low in place. What I would like to see in the coming weeks is a break above that 60 level, 61 maybe, to push to new highs. So staples is gonna be one of my outperformance sectors, but I'm gonna keep an eye on it because it might turn down. I hope not, but it might turn down, and we need to be aware of the fact that it needs to improve rapidly. And the last sector is healthcare. Well, what can I say? I mean, this has been a stellar sector. It's pretty good on the weekly RRG, showing very nice tail, powering strong RRG heading. And we have it on the daily RRG, rotated back. It actually made a little dip here, put it like that. So, and it started to curl up, and it's now solidly back into the leading quadrant. Now let's look at that on the price chart, and you see that we are breaking out of that horizontal range in relative strength, which is adding to the relative fuel. We're very close to all-time highs on the weekly chart, where now there's a little gap area right there that we need to overcome. But with the current momentum in place, with the current stuff going on, look at this level. This is 101, and this is 102 and a little bit. If this one goes above 102, very nice. This is going to be a very strong sector. This is the one that you want to have in your portfolio, especially with the break in relative strength. So let's have a quick look at the overview of all sectors. Here it is. Then we have neutral, materials, communication services, and discretionary. We're bringing real estate from neutral down to an underperformance, together with energy, financials, and industrials. And the good stuff is found in technology, staples, utilities, and healthcare, with healthcare being the clear leader, and technology on the way to go back to a real nice stint. And that was it for sectors this week.
Ladies and gentlemen, this was the 28th episode of Sector Spotlight. Thank you for watching, and I hope you enjoyed the show. Please leave your comments below the video, or send me an email if you want to tell me what to cover, or if you have any questions. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. Meanwhile, stay safe, and I hope to see you next week.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.